The battle of the beverages, Coca-Cola versus PepsiCo, and at the end we're going to throw in a newcomer, which is Celsius, a company that's taken a lot of market share recently in the beverage sector, perhaps giving the first two a scare. PepsiCo and Coca-Cola are both known as dividend kings, as they've both increased their dividends for over 50 years. They've both got solid, consistent business models, and one's owned by the great Warren Buffett, and the other owned by Terry Smith. Let's break down the businesses, then the numbers, and at the end I'll tell you which one I like better in terms of a long-term buy. Let's get straight into it. The first thing you need to know about these two stocks is they don't just own Coca-Cola, the beverage, and Pepsi, the beverage. Yes, those are the two flagship items, but they own an array of beverage and food companies under them. As Coca-Cola grew in popularity and profitability, it got bigger and it started to snaffle up all of the smaller food and beverage companies. Right now, it owns Appetizer, Body Armor, Coke, Fanta, Fuse Tea, Powerade, Schweppes, Smart Water, Sprite, Vitamin Water, and a bunch more. It's a beautiful array of food and beverage brands. Then we look at PepsiCo, and I'd argue their brands look even better. They have 500 plus brands under their company: Lay's, Pepsi, Doritos, Gatorade, SodaStream, Walker's, Mountain Dew, Mirinda, Fritos, Cheetos, and a bunch more. So in case Pepsi or Coke, for whatever reason, people stop drinking, which is not going to happen, they have hundreds of other brands that they make money from. Pepsi, 58% of their revenue comes from food and 42% comes from beverages. 57% is US and 43% is outside the US. And if I had to pick between the two groups of brands, I'd probably pick PepsiCo's list just off the top of my head, even though I do think Coca-Cola, the individual drink, is more popular and better than Pepsi, the individual drink. Now let's compare the two companies' dividends. A lot of beginner investors become extremely obsessed with the dividends of each stock when they first begin, but as you mature, you realize that sometimes it's important for companies to reinvest earnings in the business instead of just paying it all out as a payout ratio as a dividend. As said in the introduction, they're both dividend kings. Coca-Cola has increased dividends for 61 consecutive years, and PepsiCo is not too far behind them, increasing dividends for 51 consecutive years. In terms of dividend yield, Coke pays a slightly higher yield of 3.2% compared to Pepsi's 2.9%. To put that simply, if you invest $100 into Coke stock every year, you'll get a dividend of $3.20, which is, it's not massive, but it's certainly nothing to complain about. Then we take a look at the payout ratio, aka how much of the earnings does each company pay as dividends. We can see that Coke pays most of their earnings as dividends at 73%, and Pepsi pay even more, as 80% of earnings go out as dividends. So neither of these two companies are investing much back into the business, which I guess makes sense. They're so mature in their business cycle, just return cash back to shareholders. So now let's take a look at things from a price basis. Which stock is cheaper? To do this, we can compare its price to its earnings and its price to its free cash flow. Looking at price to earnings, they basically sort of hover around each other historically, around the same price to earnings. But right now, it's basically exactly the same. PepsiCo has a PE ratio of 20.9 and Coke has a PE ratio of 20.5. So it's basically the same. Taking a look at price to free cash flow, very similar as well. PepsiCo just slightly higher at 25 market cap to free cash flow, and Coca-Cola 23.8 market cap to free cash flow. So for those who don't know, free cash flow is often considered a better metric than earnings, as it's harder to manipulate by the management. So maybe PepsiCo just slightly more expensive, but not much in there. But let's take a look at growth. So forward 2-year revenue growth for Coca-Cola is 4.3% and earnings per share growth is 6.2%. Looking at Pepsi, it's even more. Revenue growth is 5.7% and earnings growth is 9.6%. So Pepsi's grown or is expected to grow at a lot faster rates of clips than Coca-Cola. And you can see this historically, just look, this is Coke, this is on the Buffett Investors website. Take a look at Coca-Cola. They've really struggled to grow their total revenues over whatever period you look at, 3 years, 5 years. I like to look long term. 10 years, they basically haven't grown their revenue at all. They've actually decreased revenue. So this is a business that is struggling to grow. But you look at Pepsi, they're doing a lot better in growing the top line. 10 years, they've grown at 3.5%. And the past 5 years, they've grown at 5%. 3 years, 7%. So just in terms of growth, I do like Pepsi a lot better. And this is the reason if I had to choose between the two stocks, I'm going to pick Pepsi. And the reason is because growth is important. You know, when you're struggling to grow your top line, it's generally not my favorite business to own, because it does bring in the question, well, when is that going to start to decrease? And also, I do prefer PepsiCo's list of brands. They just seem a bit stronger. But now let's talk about the newcomer on the block, a stock which over the past 3 years has grown by 2,700%. The stock I'm talking about is Celsius in the food and beverage space, the same as PepsiCo and the same as Coca-Cola. Now, technically, Celsius is not that new. It's actually been around since 2004. The only difference now being is it's found a way to make money and make a lot of money. As of the last 12 months, it's made $155 million, whereas before it struggled to even cross that $10 million mark, and before that, it was unprofitable. This company is still tiny compared to the big dogs, PepsiCo, which has a market cap of $230 billion, and Coca-Cola, $245 billion. Look at Celsius, it's only $13 billion. And Celsius, they market themselves as selling a healthy drink, which they say accelerates metabolism and burns body fat while providing energy. Not sure how much I believe that. I'm a little bit skeptical on these types of health claims. But they also sell protein bars and liquid supplement categories. And prior to about 5 years ago, they were a company that were really struggling, hadn't made profit in about 13 years. But then the past 5 years, they've been able to generate some really good revenue, especially in the past 2 of those years. They basically doubled each year. And you have to question why. A lot of this has come from spending an absolute ton on sales and marketing. Even from an individual perspective, I've seen their drink on the Theo Von podcast, George Janko. It looks like they're marketing in the influencer space, which is very smart, and it's clearly worked for them. And they've spent so much money, so much so that they lost $187 million last year. Now, the interesting thing about beverage companies is a lot of consumer buying patterns just comes from who can market their product the best, not necessarily on taste. You know, just look at Prime and Feastables from Logan Paul and Mr. Beast. It's not necessarily that they've got the better product, but they're by far the better marketers. They have the views on their side. If Celsius can learn to market well, which maybe they have learned the secret, and not bleed too much money, who knows? Maybe they can grow into a big company like Monster and Red Bull. But with the history of not making money for 13 years and not doing that much when Monster and Red Bull were able to grow by so much, it's not exactly my type of stock. So I'm definitely not buying. It's just too risky. I'm not saying that this can't be a big company in 5 years' time, especially if they can do what they did over the past 5 years. But for me, it's too risky. And I'd rather have something like PepsiCo and Coca-Cola. They're a lot more stable business models, and they don't need to lose $187 million from massive advertising to start making decent money. But PepsiCo and Coke, they're never going to give you high returns. Yes, they'll give you solid, consistent dividends. Yes, maybe a 5% overall return, just like a bond. But I don't see the 10, 15% type returns in these mature, expensive cash cow companies. If you think I've missed any insights on these companies, which I'm sure I have, let me know. And if you want to join the Investing Academy, you'll get access to Buffett investors, and you'll get to see the stocks that I'm buying and selling.